Good evening. It's Monday and you're watching Within the Frame. I'm Kim Do-yeon, filling in for Kim Bo-kyung. The two biggest economies in the world, the U.S. and China, have not enjoyed friendly trade relations in the past few years. However, recently there have been efforts by the two to start thawing relations. In fact, last week, U.S. Commerce Secretary Gina Raimondo visited China and met two high-ranking officials there. This follows a couple of other visits by U.S. President Joe Biden's cabinet members to China recently. Now, does one from the Commerce Secretary who has the key authority over U.S. trade policies mean the beginning of cooperation between the two global superpowers? Also, what does the two countries' cooperation mean for South Korea, as well as the members of ASEAN countries who closely border China, as the ASEAN summit kicks off this week? I'm joined by two experts today. First, let's welcome Professor Yang Jun-seok from the Department of Economics, Catholic University of Korea. Good evening.
Happy to be here.
We also have Professor Hwa-Kyun Kim of Banking and Finance at Texas A&M University's Mays Business School, connecting with us from Texas. Thank you for joining us at such early hours, Professor.
My pleasure. Thank you for the invite.
Now, I want to start with you, Professor Yang. It's been a few days, and Raimondo's visits, have had follow-up interviews. We've seen her comments, but what does this visit mean? And it comes after a few years of trade tensions between the two countries. Is it more than just a show?
Well, we don't know yet because they've been saying that having a conversation is very important, and it is. But there doesn't seem to be a follow-up with any concrete measures on both sides. Usually when you have a diplomatic event like this and both sides get along fairly well, then they usually agree on few, perhaps, showpieces, the agreements that they can make, even if it's only symbolic, that they can drag out and say, we agreed on this, so we're very happy about this. But there doesn't seem to be one this time. And for last few months, the United States have been emphasizing that they're not decoupling, they're de-risking. They still want relationship with China. They still believe China is a very strong market. And the Secretary Raimondo emphasized that United States firms still want to invest in China, but because perhaps their recent relationship have been going badly, that there has been a lot of difficulties on the part of American or foreign firms working in China. So she wanted some of that to be loosened, some of the regulatory environment to be less strict, and perhaps, I think the wording she used was consistent. She did point out those problems. She did point out that they want the relationship to be friendly. But Raimondo also pointed out that there are some things that they are not going to give up on. They are still de-risking, which means that there are still securities measures, some high-tech materials or materials that can be used as weapons will still be restricted. So she tried to balance both sides, but I'm not sure if it worked in China all that well. In the United States, you still have a lot of politicians who are insisting that, well, they may not use the word decoupling, but they still seem to think in terms of decoupling than so-called de-risking. And frankly, I'm not sure what the difference between the two is. I don't think the United States measures put against China has been loosened to any effect. So in a sense, yes, they agreed to talk. They want to get into a more friendlier environment. But I think neither side is ready to give up the walls that they've erected for the last 2 or 3 years.
Right, and you bring up a good point, the word consistent. And I wanted to turn to Professor Kim now. Professor Yang actually did touch on certain practical results, and it might not have worked well for China, but we did hear about an export control group meeting. And I think that has to do with the consistency that the U.S. firms need from Chinese government. So what do you think this group will do going forward, and what can we expect from this group?
Yeah, I think in a nutshell, the Secretary Gina Raimondo addressed concerns of the U.S. businesses in China, as you point out, and also as Professor Yang pointed out. So they're going to establish a work group related to the export controls, and also they are going to create work group for trade and investment solutions. They said they will meet twice a year. Technical discussions probably will follow in terms of like how to protect trade secrets and business information, and also the recent China's restrictions on purchasing the microns, memory chips, and also the U.S. efforts to limit China's access to advanced semiconductors and AI-related products. That part, I think it's completely unresolved and even not for discussion or negotiation. So from that angle, overall, the U.S. China Export Control Group meeting is a positive development. And hopefully they can reduce the risk related to this type of the geopolitical stuff, and also related to all this export-related issues. But to me, clearly, both countries don't have intentions to yield, because the U.S. does not want to lose their advantages in information technologies, AIs, and also all this computer-related stuffs, while the China desperately wants to access the U.S. products, patents, and technologies. And after all, they want to sell the more like, these type of products using the baseline technologies to the world, including the U.S. So this is a classic learning and copying, by learning by copying and exporting. So it has been so successful. So the China wants to maintain it, but U.S. cannot allow this anymore. And this practice has been under scrutiny, and which leads to this trade tensions and war. So overall, the talk is good, but talk can be very cheap. So I think this just confirms the existing distance between the two countries in this regard.
Right, and I wanted to get into the distance between the two countries, and it's been a few years, Professor Yang. So I wanted to talk to you about why all of a sudden the efforts to come close to the gap. And here in Korea, at least, there are worries that China's economy is not as strong as it used to be, and it's not looking bright in the future. So does that have anything to do with China maybe accepting the efforts to close the gap with the U.S.?
Well, it seems a bit interesting. When the United States had a lot of trouble with very high inflation last year and the year before, it was China which was trying to get U.S. involved into a conversation, and it was more or less the United States which was very reluctant. Now it seems perhaps the other way around. The United States is making these forward movements, but China doesn't seem to be all that excited about it, even though now United States economy is going very strongly, while the Chinese economy seems to be stuck in the doldrums. Now, you mentioned whether China is having some problems with their economy. Definitely. Their second quarter growth rate was over the 12 months, 6.3%, which sounds high, but it was about a full percentage point below what analysts had expected. Their quarter-to-quarter growth was only 0.8%, which was just slightly higher than Korea. And, well, they are higher than Korea, perhaps, but given their economic position right now, it should have been much higher. Now, will this problem be temporary or long-term? That, I think, is the key question, and nobody really has the right answer. But because they have the domestic problems with real estate, I'm not sure if you can describe it as bubble bursting quite yet, but still, it's going halfway there. They have, because of that, they have a lot of problems with domestic debt. Their debt is said to be over 300% of their GDP. And because a lot of their debt is concentrated on state-owned enterprises and regional governments, they really don't have the fiscal strength to engage in an expansionary fiscal policy. And even if they did, that might make the problem worse, because that might pile up even more debt in the medium and longer term. So while we're not quite sure whether China is going to have very long-term problems, there are some worrying indicators that perhaps they will. Given that the Chinese strategy, I think, should be to try to get themselves out of this problem through a export drive, but the global economy is not doing very well right now. So they may try to use perhaps politics, geopolitical factors. They've been acting very aggressively in the border areas. So that may be one way they're trying to get out of this problem, try to get people to look at the geopolitics rather than economics. How would this affect Korea? Well, Korea is not having a really great time either. And Korea really needs to count on higher exports. And that will depend on Chinese economy, especially Chinese exports. But the problem is Chinese exports depend on global economy. Korean economy will depend on Chinese economy. So that means there will probably not be a recovery until global economy recovers. And that might take a while.
Right, and we'll get back to your topic on your discussion on Korea's economy when it comes to this. Now, Professor Kim, where does U.S. stand in terms of the situation? Like you said, both countries not yielding, but U.S. is definitely making more first steps. Does it need China's cooperation at the moment in terms of its own economy, or is this Biden's re-election in the picture, as the cabinet members aren't really yielding, but they are showing that they can work with China if China follows along?
I think those are a good set of questions. I think a short answer to the first question probably would be not really, but clearly some coordination would happen, and it would be desired for the U.S. as well. After all, for the last decade, the low price, low plus, the inflation was partly due to the China's, the supply of these low price goods and services. But the Biden's re-election agenda definitely is in the picture, although it is somewhat, kind of countered by the hawkish, the Republican Party. But overall, I think we should realize that the nature of these two countries' tension is more of a competition rather than cooperation. Because what the U.S. claims is more like, we want to set the rules for fair competition and how to protect intellectual properties, etc. But China wants a deal to maintain what China has been doing, so that they can just keep exporting, at cheaper prices, and they just want to still use the cheap labor prices, etc., which is not actually quite the standard, actually at a standard to the other countries in a sense. So cooperation is a nice thing, but it's not going to be achieved, and I don't think U.S. desperately wants to bend to get cooperation from China in this regard. And so it's going to depend a bit on how the U.S. inflation is going to evolve over time with the labor market conditions. Overall, the U.S. economy is relatively strong, and here, not just about the economic issues, but the differences of the governance structure of these two countries. U.S. is highly decentralized, while China is more centralized. Therefore, China actually first of, in about for the last 2 decades or so, this is the first time the Chinese economy is put to a test. And also this actually is a test for their governance model. It's a very centralized system. So clearly they try to get out of that, and it's not going to be simple.
Right, it's certainly not simple. And what's also not simple is, I wanted to go back to South Korea's issue, is the U.S. CHIPS Act and how it has limited South Korean companies because of its works and investment in China. So do you think, as Professor Kim said, it's not a cooperation yet, and it's still a competition, but do you see a way out of South Korea in this situation where the firms were kind of caught in the middle?
Well, it's not only the Korean firms which did not like the provisions in the CHIPS Act, it's American firms, because Americans also have a substantial investment in China, and they were looking to expand in the market. So if you remember just a few months ago, before these secretaries visited China, Elon Musk and Bill Gates visited China and said that their companies were still committed to China's market. So in that sense, the United States, perhaps not the government, perhaps not the politicians, but the people who are in charge of economics, they don't want to give up the Chinese market. They don't want to give up those opportunities. Now, having said that, right now the political part of the United States seems to be very, very sure that they do not want advanced technologies, they do not want advanced IT goods to flow into China and have China produce most of these high-tech goods. So that's probably not going to happen anytime soon. But I think what can be realistically expected if Korean firms also work with American firms, because American firms obviously have more voice in American politics than Korean firms, is that perhaps we can still produce mid-level technological products in China, but leave the high-tech to trusted supply networks, trusted countries, whichever countries that may turn out to be in the end, and leave sort of the middle tech to China so that these companies can still invest and sell in China. Now, in order for that to happen, though, I think even now, some of the rules must be loosened a bit further, and Korean firms are going to have to lobby with the American firms, because I don't think Korean firms by themselves have the political capacity to convince American politicians. But I think this gives Korean firms at least some possibility to continue to work in the Chinese market. It's just that it's not going to be for the latest generation IT products.
Right. And I want to also ask you about the ASEAN summit that's coming up. So on September 6th, President Yoon will be attending the summit and will be meeting with ASEAN countries. Now, as you know, Southeast Asian countries are one of the bigger trading partners with China now than the U.S. is recently. But so the summit comes at a very important time, right after the two countries kind of had a trade talk. So what can President Yoon get out of this summit, and where does ASEAN countries stand at the moment?
Okay, I was very struck when the Korea, Japan, and United States had their summit. There was a statement, the president's statement had a substantial part on ASEAN countries, their wish for ASEAN to join Korea, Japan, and the United States. Perhaps that represents somewhat of a change. When the United States started negotiating Indo-Pacific Economic Framework, they were interested in some ASEAN countries, but not all of them. But now they seem to be asking ASEAN as a group to participate in the, if we could call it that, the American bloc more actively. And then as far as just economics is concerned, if Korea cannot fully participate in China, then the next best option is India and ASEAN, especially countries like Indonesia, which has the highest population after China and India. So if we are going to lose part of the Chinese market, then ASEAN market is the natural next market that Korea can go into, not only for Korean exports, but also setting up a new production base. Vietnam is already a very strong production base for Korea. A lot of Korean companies are setting up production facilities in Vietnam. We're exporting a lot of products, both consumer goods and intermediate parts, because of those investments. So perhaps we can look forward to trying to get perhaps Indonesia to be another Vietnam, or Philippines. We also have a lot of relationship, electric vehicle supply network with Philippines. So those are kind of things that Korea specifically will be looking for.
Now, within this week, the G20 summit is also happening, and President Yoon will head there right after the ASEAN summit. Now, he will also, that's happening in India, and he will hold a bilateral sideline meeting with Indian Prime Minister Narendra Modi as well. So what can we expect from this talk, and in which areas do you think the two can cooperate, Professor Kim?
Well, clearly, the South Korea and India are both major economies in the world, and India's population is the largest. So clearly, they will have strong interest in expanding their trade and investment ties, and they can definitely increase bilateral trade and attract more investment and cooperate on joint projects. For these two countries, I think they can definitely cooperate. So, and especially now the many countries are sort of like replacing or at least to complement China's role as a manufacturing base, and India is one of the key candidates. So in that sense, and also India is a large market, so I think it's going to be very important to make good relationships and continue to have like good relationships. And technology-wise, also there are a lot of things to complement each other. So I think definitely they can have some share of these kind of different types of the technologies they have. And also the geopolitical sort of things are getting more important because India is also has the borders of China, and also there are a lot of issues around this area. So clearly, even in terms of the security and the geopolitical, the cooperation, India is going to be a major partner for the next decade. So clearly, the President Yoon can actually just build the good relationships with the Prime Minister in India.
Right. Now, to wrap up today's discussion, I wanted to bring up a talk that there was a suggestion of danger for South Korean economy in September. Professor Kim, the government is, however, claiming that things will take a turn upwards towards the end of the year. What is your outlook? Can we not be worried?
I think things will not get worse, but I can't see it getting much better either. So we'll probably be stuck in this perhaps slow-moving state for the rest of the year. And the reason I'm saying that is that while we had a fairly good month in May and June, where production, consumption, and investment grew, the July figures, which are the latest figures available, all production went down, consumption went down by 3.2%, investment went down by a whopping 8.9%, though investment is very largely affected by IT investment, so it's really very volatile. But the services production only rose by 0.4%, while the manufacturing production fell by 2%. In a lot of sense, the reason that Korean economy did fairly well in the last few months was that we were engaged in sort of a revenge spending because of the lockdowns and shutdowns we had. We had an extraordinarily high services demand in the earlier part of the year. That seems to be running out of steam. And then exports, we discussed some of this, but exports are also running out of steam, though the government seems to think that we can raise exports in the last few months of the year. I'm not sure if that is going to be possible, but domestic spending is down, export is down. That means slow economy.
Right, right. I'm afraid I can talk with you two at the same time for hours about the economy, but this is where we're going to have to cut it. Professors Yang and Kim, thank you so much for joining us this evening, and hope to see you again soon.
Thank you.
Thank you very much.
Now that's all for Within the Frame tonight. We'll be back tomorrow with more in-depth stories. Thank you for watching, and goodbye.